Good afternoon, everybody. Thank you for joining us today at this Ask Us Anything About Corporate Tax webinar. I'm Sarah, the Digital Marketing Manager at Neat. Today we have Jan, Business Development Manager from InCorp Asia, a leading provider of corporate solutions across the APAC region, and also Hayley, Neat's Senior Customer Solution Specialist, as our speakers. Hayley will give an overview of Neat, a global business financial solution provider, on how we help entrepreneurs and SME owners scale your business with our financial solutions. And then Jen will take over the stage and share how you can be better prepared for the tax filing process and share some tips on how to legally reduce that. Feel free to submit any questions you have in mind throughout the webinar in the Q&A box. There will be around 15 minutes at the very end to go through all your questions. We've already collected some questions from the webinar registration forms, which we will also address during the Q&A sessions. This webinar will be recorded and shared with you later this week for your reference. Without further ado, I'll pass it on to Hayley.
Hi everyone, good afternoon. This is Hayley. Before we pass it to corporate tax sections, I would like to take a few slides to introduce you about Neat. Okay, so I'd like to start with numbers. Neat was founded in Hong Kong in 2015, and we have 30K customers from over 30 countries. We have transacted over 15K of transactions every month. Throughout this couple of years, like 7 years, establishing the companies, we have over 80 employees across 2 international offices, London and Hong Kong. So what we do, what our product and services are, in case you're not familiar with us. So we have provide multi-currency wallet in USD, EUR, GBP, and HKD, which allows you to receive and make payments to over 177 countries in multiple currencies. We are Visa card issuers. We offer HKD and USD physical and virtual cards to our customers. So we also connect payment gateway like Stripe and Shopify, so you can receive funds over there. And we also have an integration with Xero, so make your accounting easier. As an entrepreneur ourselves, we understand for SME it's very hard if in case you're not located physically in Hong Kong, for example. You have to go to bank and suffer for a very long queue, slow service to open just an account for your business. So with Neat, we offer fully online digital service. So you can register us online and do everything with us online. You don't have to be physically located in Hong Kong. And what we have also, in case you need help, unlike traditional bank, we have 24/7 email, chats, and phone support. And what makes us different? There might be different companies in this field, but what we offer, it's a very transparent pricing, no hidden fees. You don't have to wonder, and we don't have a minimum charge per month as well. For like Visa card, we don't have any minimum amounts that you need to be spent with us per years, annually, or per month. So it's totally transparent, and we are always here for you. So in case you're interested in Neat services, you could sign up today. There's a QR code there. We offer 10 international transaction fees waive if you're signing up today with our promotion code. It might be a little bit early for the sections. So in case you are interested, please do scan it first and register later on. So it's a very quick, brief introductions of Neat. As today's topic is about corporate tax, I'll pass the time to Jen. But feel free to have any questions if you have, put it in the Q&A sections and we'll get back to you at the very end. Thank you.
Okay, so I am Jen. Thank you for joining our webinar. So I'll take a few minutes to introduce. InCorp Group is a Singapore-based corporate service provider. We are serving mainly of all types of corporate services, including from incorporation, tax, accounting, and business advisories, and as well as like global expansion advisory. Okay, we have covered 8 jurisdictions, and we have over 800 staff over the world. We provide a comprehensive service in details, but we cover these 8 jurisdictions. Apart from Singapore and Hong Kong, we do have Indonesia, Vietnam, Philippines, India, Malaysia, and Australia as well. So apart from these are all our direct branch offices. And we are also a member of the Prime Global Network, which is a global network of professional accountants and corporate service providers. So apart from these countries, we can also help you to develop your business around the world. Before we talk about tax, I would like to go through a little bit of this regulation compliance of a company. A limited company, you need to, apart from your business, you need to comply with these regulations every year. In fact, it's divided into two departments, government departments you have to deal with. The first one is the company registry, which is when you register a company, you need to file off annual returns every year. So this is annually. What is the day when will you need to do it? It is on the anniversary date. Within 42 days after the anniversary of the date of incorporation, you need to file the annual return with company registry. Another thing is you need to hold an annual general meeting every year. This is also in respect of the financial year of the company, not calendar year. The last thing is the register of significant controller and designated representative. Some entrepreneurs, you may not be aware of these regulations because this is not very long ago, just a few years ago, the law required each company to register this significant controller and designated representative. This one is whenever you have any changes, you're required to update the registry. Okay, apart from the company registry, I said there was two departments you have to deal with. This is the top one. In the revenue department, you need to file of profit tax returns. This is a lot of people are confusing about this, I believe, because they're talking about, oh, when should I do this? When should I file the tax return? And what do I need to submit? This is confusing. So I will go through one by one later on. But basically, you need to file the profit tax returns. When do you need to file? It should be when you receive the profit tax return, the forms from Inland Revenue Department. Usually it is for the company, corporates, incorporated. Your financial years end at 31st of December. You will receive, you need to file in August. If your financial year ended in 31st of March, so you need to file on November every year. The next thing is about sole proprietorship. You need to file the tax return together with your personal tax return because the sole proprietorship is not separated from a person. So it will be June or September every calendar year. Another thing is if you are employer, you have employee, you need to file the employer tax return. This should be within 1 month after you receive this form BIR 56A. The last thing is renewal of business registration. So it should be renewed annually. This is after 1 year, your company incorporated. Usually you will receive this business registration mailed to you. What is the requirement for you to file the tax return? If your company is newly incorporated, it is not 1 year after your incorporation date. In fact, it is 18 months after your incorporation date. And companies other than newly incorporated, the notification you receive from IRD is the 1st of April. IRD will send out, it will mail out all tax return on 1st of April. So you will receive that. But the first time is 18 months. Okay, what do you need to do? Filing of tax return for corporation. We are talking about limited companies. So apart from filling up the form, you need to submit along with audited accounts. This is including the company balance sheet, auditor's report and profit and loss, and financial statements. This is required. Within 1 month from the date of the notification, you need to submit. Usually, if you request for an extension, it's acceptable when you provide sufficient reasons. What is the audit report requirements? Just mentioned for all the limited companies in Hong Kong, you're required to submit with the audited financial statements and auditors report. So every company incorporated in Hong Kong, you must have your financial accounts audited by auditors. The auditors, they under professional accountants ordinance, they are practicing in Hong Kong. So for example, your company is a subsidiary of a mainland China company. Can you appoint your China accountant to audit your Hong Kong subsidiary company's account reports? The answer is no, because it must be the accountant must be registered under Hong Kong Professional Account Association, Accountant Association. Okay. For private companies, the auditor reports just required to submit to the IRD, and also must be laid before the annual general meeting and show to all the shareholders. But it is not required to show to public. About financial years, previously I just mentioned about always for your company is not about not talking about a calendar year, it is according to your financial year. So what is a financial year? So if there's no mandatory year-end date, you can set your own financial year-end date for your company, but 31st of March or 31st of December are two most common ones. The company will set these days. So Hong Kong's audit account standards is prepared in accordance to HKFRS, that is Hong Kong Financial Reporting System. It is identical with the IFRS, is International Financial Reporting System. So this is the standard we need to follow. But in fact, for entrepreneur, you don't have to know into details because the auditors, they will know it well. Okay, next one, please. Okay, apart from limited company, if your company is not a limited company, it's only a sole proprietorship or partnership, what you need to do? For sole proprietorship, you need to report the profit or loss of all your sole proprietorship businesses in the part 5 of your tax return, the individual tax return, in fact. So for sole proprietorship, why I said it's all your businesses, because each business you need to register, you need to get a business registration. One business registration for sole proprietorship, you're only allowed to do one type of business. So maybe you have many different businesses, but all of them, all these businesses are not running under a limited company, you just need to put all together under this individual filing tax return form. For partnership, you need to submit the profit tax return in the form BIR 52. So, but these two types of business, you don't need to hire an accountant to audit your account. So this talk about a little bit of net income, because in this form BIR 60 and BIR 52 both ask you to fill in net income. What is net income? Net income is gross income minus your tax deductible business expenses. So you have to be careful about what type of expenses are tax deductible. For example, the salary you pay yourself, you should not report under this part 4 salary tax, because this should be under business profit. So that means it cannot be deducted. The other way, if your company is a limited company is legally it is a separate entity. So it's separate from the person, from the shareholders. So if a limited company, if you own this company and you also work for this company and you pay yourself salary from this company, in fact, it is deductible as a salary expense for the limited company. And yourself, you receive this company, this salary, you can also report to as a personal income and entitled for personal income allowance deduction. So this is the difference between the sole proprietorship or partnership with limited company. Next, please. This for sole proprietorship and partnership. This what apart from filling up the form, what other documents you need to submit? It is classified as two different types. The first one is small business, which means your gross income do not exceed 2 million Hong Kong dollar. You don't require to attach any financial statements to the tax return. So you just fill in the amount. But even though it's not required to attach financial statements, but you need to keep your account and keep any receipt and proof just in case the IRD will come to ask you, and then you need to show to them by the time when they ask. For business other than small business, that means your gross income is exceed 2 million Hong Kong dollars. So you need to submit a set of certified accounts with a balance sheet and profit and loss, etc. So, and you also need to submit a tax computation schedule. How these accounts, this assessable profit is or loss is arriving as, that means how you calculate this assessable profit. Next, please. So we know about what you need to do for submitting, which form, filing, when to do it. Let's talk about a little bit about Hong Kong tax regime. In fact, Hong Kong is one of the lowest corporate tax rate jurisdictions, one of the lowest. When we apply for a two-tier profit tax regime, what is two-tier? That it is for the assessable profit up to 2 million. The tax rate is for incorporation, that means limited companies, is 8.25%. For unincorporated, that is sole proprietorship or partnerships, it is 7.5%. So for profit, assessable profit over 2 million, that means the first 2 million is calculated at 8.25 or 7.5%, but over 2 million is calculated in 16.5% for incorporations and 15% for unincorporated. And other than this profit tax, does Hong Kong apply for any other tax? Let's see the table below. In Hong Kong, we have no VST, no GST, that means general sales tax or value added tax, capital gain tax, import export tax. We don't have all of these taxes, does not apply. We don't have withholding tax, except for certain royalties, a little bit. But generally, other things, most of 99.9%, we don't have withholding tax. And how about dividend and interest income are also tax exempted. Doing business in Hong Kong, there's no foreign ownership restrictions and no restrictions on banking or foreign exchange. And Hong Kong doesn't apply worldwide taxation system. So in fact, Hong Kong, you can call is one of the tax heaven. So Hong Kong applied for territorial taxation system. If you think this Hong Kong corporate tax 16.5% is still high, you still have other ways to save tax. This is one of it, like because Hong Kong applied territorial taxation system, you may apply for offshore tax claim. That means only Hong Kong source profits are subject to Hong Kong profit tax. If a Hong Kong company carries out its operations outside Hong Kong, so it will have the technical basis to pursue an offshore claim, even when relevant profit are deposited with the bank accounts in Hong Kong. That means it's not only operate outside Hong Kong, your clients, your income source is from outside Hong Kong, and the place of decision is outside Hong Kong. All of these criteria underneath, if you meet all these criteria, you may be eligible to apply for offshore tax exemption. So another thing is audit exemption for dormant company. So what is a dormant company? A dormant company refers to a Hong Kong limited company with no accounting transactions during a financial year. So basically that means this company didn't have any business activity. What happens if you apply for a dormant status? So a dormant company is exempted from filing of annual return. Remember the first thing I said, for compliance of a limited company is filing of annual return every year. But for dormant company, it is exempted. And also it is exempted from preparing the audited financial statement, appoint or remove of an auditor. This is exempted. So the reason why we should apply for dormant status, there are many reasons, but these are the most common one. If you open a company but you don't do any business, nothing happen, why you still keep it? For example, you want to safeguard this company name because company name is unique. If you withdraw, then other people can use this company name. So next one is maybe you get ready for some future projects. You just want to keep the company. Or the company is just for holding an asset or intellectual property, or like this royalties or trademarks or patent. Or you want to maintain an inactive company, but at the lowest possible maintenance cost because you're exempted from or doing audit report and annual return filing. Another thing you can use to save tax is charity. Any donation to charitable institution, the receipt over 100 Hong Kong dollar, it can be tax exempted. This is the maximum is up to 35% of the accessible income. What is a charity or charitable institution status? You cannot just, my institution, I'm doing a lot of charities, I am helping other people, I go to Shan Shui Po, offer free meals to the homeless. You cannot claim yourself as a charitable charity because there's a definition. The section 88 of Inner Revenue Ordinance grants the charitable status to an entity. These charitable institutions are exempted from tax. Charities itself doesn't need to pay tax to the government, and they are eligible to issue a tax exempt receipt for the donations they receive. The last thing is, other than low tax rate, Hong Kong have also a lot of other tax incentives, like a concessionary tax rate of 8.25% for some special sectors. For example, like insurance, aircraft leasing, corporate treasury centers, aircraft leasings, etc. These type of special industry. For a certain ship leasing business, even the tax rate is down to 10% shipping for this special industry. If you say, oh, I'm not in this type of special business, how can I save tax? You can still enjoy 100 to 300% tax deduction for some qualified research and development expenses, or you install some energy efficient environmental savings, clean energy building installation in your property, in your business, in your office. Need to be qualified. For Inland Revenue Department, they have a list of expenditure is eligible for tax deduction. I finished. If you have any questions, you're welcome to ask, and we still have some time for answering your questions.
Yeah, everybody feel free to answer any questions. And meanwhile, we can go through some of the pre-collected questions that we have received through the registration form. Okay, the first one goes to Jan. So our registrant run an e-commerce business. It's incorporated in Hong Kong, but they mainly sell to the North America. Do they need to file tax return in other countries too? Is there any offshore profit tax exemption in Hong Kong that they can claim?
If the company is incorporated in Hong Kong, so the company just required to file tax return to Hong Kong. But if they are selling to America or some other countries with sales tax like VAT or GST, they have to check that country. Do they need to register for the VAT or GST?
So it depends on the country.
So, but for Hong Kong, he has to file tax return. Hong Kong, even though his business is an offshore business, I assume he himself is not operating in Hong Kong. He didn't hire any Hong Kong staff. He do this business in other country overseas and selling the customer also overseas in other countries. But he still need to file the tax return and apply for this offshore status. So this is not automatically granted, the offshore status. Hong Kong, we don't have. Some countries, they have offshore status. Like if you claim yourself as offshore, you're automatically tax exempted. But Hong Kong, we don't have. So you still need to file, but you can apply for offshore tax exemption.
We've got another question related to tax. So how to file tax for self-employed startup owner?
Self-employed. Okay, it's same as the sole proprietorship I just mentioned. Just file to the personal tax return form, fill in the part 5.
We got 2 live questions, both from Mr. Zhang. I believe we've already answered the VAT rate in Hong Kong and the 2-tier profit tax during Jan's presentation. There's another one. I understood the tax kinds in Hong Kong as COVID-19, BPH Investment Holding, like I believe it's their company, didn't operate in the past 14 months, but will invest several projects as shareholder on know-how technologies.
If didn't operate, you can apply for dormant status until you restart your project. So you can exempt from submitting audit report and filing our annual return.
And I've got one last question. That's for Hayley. How does Neat charge?
Yeah, so we have a pricing table online, so it's very accessible to everyone. You go to Neat and just press pricing in the menu bar. We have, if it's a transfer within Hong Kong, like the local transactions, or the incoming payments we charge for free. But if it's for non-sending local payments, non-FPS, we charge USD $1. For international payment, we charge $12. So for details, you could go to our website under pricing. Pretty transparent. So
thank you, Hayley. Yes, Mr. J, both of our all of our contact details are listed on this page. If you have any questions, feel free to reach out to us separately. And due to time constraint, we will end it here. But yeah, feel free to reach out to us through the email listed on this slide. And don't forget to redeem your welcome offer from both the Neat and also InCorp Asia. I hope you guys have a better understanding on opening the business account for a company and also how you can better prepare yourself for the tax season. Thank you.
Thank you.
Thank you, ladies.